What's going on YouTube? It's Dave's Daily Trades. We have quite the episode today. So of course we are going to start off going over a quick AMC technical analysis. We're going to go through the reverse repo operations here. Yet again, another record. We're going to of course talk about why 500K is actually not the meme and totally reasonable. And lastly, we are going to be going over the Federal Reserve's latest speech and the taper that is going to be going on. So, of course, lots of things to cover, but first, we'll start with this technical analysis here. So, really the big thing, guys, we had a great start to the morning, super bullish right off the start, coming to a high at $38.70. From there, dipped down to our low of the day right away at $36.50. Now, this was the low for the entire day. And once we did hit this, of course, lots of volatility in the morning. We came back up and tested a resistance at $37.91. And from that point, guys, we were not able to break and see $38, which is totally fine, especially given the amount of moves that we've made this past week, guys. We've seen 4 straight days of green candles and 5 straight days of higher lows consistently. So that is really good to see. And really just confirms that AMC is on a bull run right now and is starting the bull cycle that we're about to witness. And guys, it's going to be massive. But from this first push up to that 37.90 range, we did have this sell off right here back down to our support at 36, call it 36.50. I know it's a little off, but that's okay. As you can see, we did have this descending level of support, or resistance rather, that brought us down here. And once we hit this, we did have very nice trending upwards. And I really thought and had high hopes that we're going to break out this first time, and then really high hopes that we're going to break out the second time. Of course, that didn't happen. And why is this a trend upwards, guys? It's because we had 3 touch points right here on this lower support level and literally carried our way up to this line. Of course, after getting rejected twice, we did start to fall down and start this descending resistance line right here that we're unable to break for the rest of the day, which is totally fine. But really the big thing, guys, I do have these red boxes drawn. Now that I'm looking at it, they are not the same color, so I apologize for that. But what I'm seeing is this is a double bottom, guys. Our low here was 36.50, and our low here was like 36.51, so very close. We can absolutely say that that is a double bottom. And typically what happens is when we hit that double bottom, we continue our trend upwards, which is what I am thinking for tomorrow. Now, after hours is barely up just a hair, 0.05%, but guys, take after hours with a grain of salt. It really does not mean much at all. All right, so now that we're through that, we're gonna just take a quick look at the 1-hour chart. So as you can tell, we are right in the middle of this, or upper quadrant of this triangle that we have right here. So the biggest thing, and we touched upon this in yesterday's video, is what is called a golden cross. When the 50-day moving average crosses over that 100-day moving average, that historically speaking has just shown lots of bullish confirmation. So if we can continue this, and we just had the crossover today, we can absolutely expect to break out of this $40 range and continue the trend higher, and of course, hopefully, to all-time highs. I really think that is right around the corner, and I know everyone out there is hoping for that. As for the RSI, guys, we are still upwards in that 50 range, which of course is the bullish range. So I would love to see a reversal right here after today's kind of flat volume and trend higher into this 60, 70, 80 range. That would be absolutely ideal, and especially with the MACD crossover that we're going to take a look at on the 1-day chart. All right, let me just zoom out real quick. So we are literally right in the middle of our resistance at 40 and support at 35. So of course, we'll see how this goes. But guys, like I said before, 1, 2, 3, 4, 5. We are on our 6th consecutive trading day where we've seen higher lows, which is really, really good. The last time we saw this, guys, was actually back at the end of May when we had that trend that went higher and higher and even higher than I initially expected. And a few things down here on the technicals. Of course, this MACD crossover, this is going to take a little bit of time to play out, just like it did happen in, I believe this was like May 10th. We had the initial crossover, and we didn't see things go absolutely parabolic until June 2nd. So don't get alarmed that we're not seeing crazy price action, because for this to happen, we have to wait and have it play out. Now for the RSI, we did dip below that 50 range. We're now trading at 49.51, but of course that is just because of our negative 1.64% today. Nothing too absurd, but still in that neutral zone, looking for the next leg up here to coincide with the MACD crossover. So we'll keep that in mind for future videos and for daily trades. Anyways, guys, we're going to jump right into the reverse repo. So guys, I literally jinxed myself on this yesterday. I said that the reverse repo has been relatively flat, just a little over $1 trillion, but we had quite the jump. We are currently sitting at $1,115 billion, which is an all-time high. We've never seen this number before. So just want to really update everyone on this every single day moving forward, and we'll see how this continues to trend. But typically, as we go later in the week, this number does tend to trend upwards. So we'll keep an eye on this for Thursday and Friday, and then typically over the weekend and by Monday, it'll dip down a little bit. But now we are well over $1 trillion, guys, so I think we're going to be floating in this area for quite some time. So now onto some really juicy information that has been floating around everywhere. So this is really just a quick summary as to why 500K is actually not a meme. I know, guys, it sounds absolutely crazy, but if you really think about it, it is not that crazy. So we're just going to read through this post on Reddit. This is by Trading Tradesman. What a name. So anyways, no one understands how this works, and many shills will say I'm wrong, but allow me to give you some background. Great. So I've worked in banking industry from 2006 to 2011. Just kind of gives you a quick understanding of why this guy is knowledgeable and his background. The system has been playing hot potato with risk, selling risk into the market so risky investors hold bags of, you know what, shit. In order for market makers to balance the books, they need to buy and burn billions of shares. If no one else sells, the squeeze will halt at a price cap set by the DTCC. So that's interesting, something that was actually new to me, meaning that if no one sells this, everyone just holds on. This price goes absolutely parabolic. The DTCC will step in, cap it at a certain price point, whatever they think is fair, I guess. Not really too sure how that works. But anyways, it will be well over $1 million, which is just absolutely ridiculous, guys. And this is per share. Imagine seeing every single share go for $1 million. That is absolutely insane. If every paper hand sold after the halt, be prepared for cash out limits. The price will not drop, but go up. Shorts bought the sell-off and burn the shares. Then round 2 starts. Halt at a lower ridiculous spike. We hold, price spikes, more paper hands. Shorts bought the sell-off and burn the shares. Share burning will continue until all shares are accounted for. And also, we accounted for the synthetic shares and the real shares that are floating around. If no one sells, the price will glitch, but continue to rise. Side note, if every paper hands, every institution, every hedge fund, every index, and that's just about everyone right there, sold off AMC at $300, shorts would still need to buy back all of those shares and then burn another 900% on the float. So, guys, this is crazy. Of course, we don't know the exact number of synthetics floating around the market, but we can absolutely, I guess, assume here that it is well over $1 billion. And that's assumption backed by certain metrics that we've done throughout the community. So, of course, we don't have an exact number. We can't tell you exactly what this is going to go to. If someone does, don't trust them, because no one absolutely knows this. But really the big thing is here, guys, is, I know a lot of people have a certain number sitting in their head where they're like, when it hits this, we're going to sell off, which is totally fine. And of course, whatever price, because you are the trader, you are in control of your account, you pick the price. And that's actually not bullshit, guys. You can absolutely predict that and say whatever number you're comfortable with, you sell. But the biggest thing is, guys, because there are so many synthetics floating around and those fake shares floating around, they are literally, even if everyone sells, they have to purchase all those shares, buy them, and then start the cycle all over again until all the synthetics are out of the equation, which is literally why we could, hypothetically speaking, hit 500K. And especially, guys, I know so many of you out there who are actually not even after the money at this point. We're really out there to change the financial markets and just change the way that we can trade for the rest of our life so none of this bullshit ever happens again in our lives. So if that's the case, guys, we can do some real damage just by holding and not panicking when things go crazy, because the biggest thing is the easy part is over. Holding through all of this was not that hard. But when we're seeing price spikes of thousands of dollars at a time, that's where things become incredibly stressful. So guys, you all need to kind of take a chill pill, drink plenty of water, hydrate, go for a run, go for a walk, and just clear your head, because things are going to be crazy. So anyways, guys, of course, the Federal Reserve came out today and pretty much said that tapering is going to be happening this year. Now, previously, they were talking about doing this sometime in 2022, but now they think it is appropriate to start doing this now. But what exactly is this? So, of course, this is just a great article that goes in depth of what it does, why it's important, and what we might see as the result of stopping this. So, of course, COVID-19 really put a wrench into everyone's agenda, financially speaking, and we did have to cut short-term interest rates to zero. So pretty much all this is with the tapering is previously they were buying assets such as bonds and various other tools out there to really just push up the economy, which, depending on, a lot of things, did help the markets at the time and helped a lot of people get back to work. It helped businesses, all this other stuff. But now what they want to do is stop doing that and stop pumping the market with money. But guys, as we know, the market is absolutely over leveraged and a ticking time bomb. So what does this mean? Now that the market isn't going to be flooded with all of this extra liquidity, we can see an overall pullback in the market. And we're just going to pull up the S&P 500 here. The SPY, this is just one of my favorite, just to get an overall look at the market. This could really hurt us, guys, because, yeah, of course, we did put this high in on 8/16, so that brings us to Monday, where we hit 447.11. But since then, we have been seeing some sell-offs. And today alone, guys, was not pretty. So, of course, we are back down to a low of 438.92 on the day. And, of course, with this tapering coming to an end, this could bring the overall markets down, which, of course, is good for AMC. We don't want to see the market bleed, but AMC has that negative beta, which will attract more investors hedging their already positions, or also even preparing for some type of market correction or market crash. So, guys, the only thing that I want you to get out of this is 500K is absolutely no meme. Tapering is happening, and it is going to be happening at some point this year, where we can see some really scary things in the market. And good things are coming for us AMC shareholders as this bull run continues, and we are going to see some crazy things in the next few weeks. So guys, stay holding, stay strong, stay happy, and make sure you hit that like button and subscribe for more content. Peace out.